Hey everybody, Brian Shannon here from alphatrends.net. Today's Wednesday, the 12th of August, and we had a pretty volatile session here today. The market, of course, gapped pretty significantly lower and continued to sell off. And then, as we kind of on the 1 minute chart saw that we had made a little bit of progress here, finding some stability near that volume weighted average price. And it was in this point right here that I told subscribers today that it looks like it could be traded at least for a day trade and to the upside to decide whether or not they wanted to transition it to a longer term hold than that. Of course, we still have this 5 day moving average that is slightly turning lower, but the important thing is we took out this prior little band of support in here and kind of flush below it. Now we are rallying up into that area again and back to this 209-ish level once again. So the volatility continues, and my feeling is that if you are buying in the morning, after the market is stabilized and it makes this nice of a run, then it's prudent to trim at least most of that position on the long side, because back to the daily time frame, we're still in the midpoint of this bigger range that we've been in this year. So really, not a whole lot has changed. And realistically, I mean, the S&P was only up 16 pennies today, as measured by the S&P, the SPY that is. Here we have that year-to-date volume-weighted average price, which continues to tell us there's indecision in this market. And we also tested and dipped below and held on a closing basis back above that 200-day moving average. So the bigger picture is still one of large indecision here, and the only people who are really doing well with it are the traders. Otherwise, it's just an exercise in frustration as this market chops back and forth. The Nasdaq dipped below that 50-day moving average and actually went on to meet the measured move objective that we had spoken about. Now, the market obviously didn't make it there in one quick swoop lower, but we did see in here that positively at the end of the day that we get back above this prior little band of support in here that had held 3 out of the last 6 or 7 days, and we're back above that. So now, in order for us to have confidence that this rally will hold, we need to see it hold above this 109.5-ish level. We've still got a declining 5 day moving average, so you cannot trust it. And we're back to this prior little band of support as well. So it remains very murky. There's really nothing here to indicate that the buyers or sellers are gaining control on a bigger time frame. The Russell 2000 was down 23 cents. This market remains in a downtrend with lower highs and lower lows. We'd seen, of course, on Monday or last Friday, the lower low, and we breached that even once again here today. So trying to pick the turning point is a very, very difficult game here. And, we're back to this kind of important level here on a closing basis. But again, the primary trend remains lower, the intermediate term, I should say, what I consider the primary trend that I like to trade in the direction of. We had this prior support broken, acted as resistance on Monday, and we're selling it. We've sold off from there. So we still remain guilty till proven innocent. Best case, you could say, is it's trying to stabilize, but there's really no evidence of that yet. And same is true for the semiconductors. We undercut the prior lows in there by just a small amount. And oftentimes when we see just a small undercut of the lows, especially after a drop, so for instance, this drop from 53 down to 50 and a half, undercut this low slightly, that they often do fail. So now what we want to see is 50 and a half to 51 hold as support. If it does that, all it does, it doesn't tell us that the semiconductors are a buy. It tells us that they're trying to stabilize, but we've got this bigger band of support back here that's going to make it difficult for this market to turn itself back higher again. So you simply cannot trust these. If you're trading them intraday, then they're great rallies, but they can't be trusted for more than a day or two. Financials did dip below that 50-day moving average and down below to that measured move objective. And again, it's not a neat move down there at all, because we had that gap higher on Monday, which failed to hold. And we saw yesterday that we broke below this support level, and we've still got this support looming as resistance with a declining 5-day moving average in the financials. So I don't see any reason to buy the financials right now. It's frustrating to look at the market overall like this and see that we have this back and forth action, but there continues to be fantastic opportunities in the individual names. Apple today turned around pretty. It was a pretty good turnaround, and what we saw happen here was what we were hoping was an undercut of this low and then for a turn higher. So when we have a declining 5-day moving average, we do not trust the rallies like we saw on Monday. But where did we get back to with this turnaround today? Just back into this little band of prior support here. So unfortunately for Apple investors, the market is still guilty till proven innocent. Best case you could say is it's trying to search for stability in here, but that's not a reason to buy.